Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Really happy that we have Mike Tosaw with us. He's an industry educator. He spent many years at brokersXpress. Now he's at brokersXpress. He's written a book, and he is a registered representative at brokersXpress, and he'll be talking about strategies for trading the U.S. dollar. As many of you know, Mike did spend a lot of time at brokersXpress, educating investors in the use of options, and now he's at brokersXpress, where he uses his wealth of knowledge to figure out the markets. And Mike, as I said, just has written a book called Go Long, New Option Strategies for Buy and Hold Investors. So please go and check that book out if you think it's interesting to you, and I think it might be. So again, please check that out. We have a great webinar that is just the moment we'll have it all started, but I just want to get through some of the legalese. Mike can talk about that. I'm going to talk about the ISE symbols, and then I'm going to hand the mic over to Mike Tosaw, and Mike will talk about the legal disclaimer, and then we'll get going. ISE FX options, they're accessible through your options broker. They're exchange-listed securities. They're cash-settled in U.S. dollars. They're European style. They can be traded at spreads. We've added some new symbols. A couple months ago, we added AUM, GBP, EUU, which is in the news each and every day. And we also have NDO, and we have the old stalwarts. We have the Aussie dollar, British pound, Canadian, euro, yen. We have peso, New Zealand dollar, Swedish krona, Swiss franc in the U.S. dollar-based form. Again, I'd like to urge everyone to read the characteristics and risks of standardized options. Also, you should go to optionseducation.org to learn more about options. Options are not suitable for everyone, so please learn the risks of options, but I think the risks might be worth the rewards for many of us, but again, the options are not for everyone. Mike, I want to hand the microphone over to you, make you the presenter, and I'm really looking forward to the presentation.
Well, thanks, Steve, and it's always a pleasure to be on the ISE platform. Just to reemphasize what Steve had said, just a couple of the legalese and the disclosures. Not able to emphasize enough the importance of the risk disclosure document. This is something with which you can get from ISE.com. You can go to brokersXpress.com. You can go to 888options.com. There's a lot of ways with which to get this disclosure document. I strongly recommend that you read through it. The other thing with which we need to mention is that I'm an investment advisor for brokersXpress, and I'm registered in the United States. So with that being said, I'm registered in the U.S. only. I'm not registered anywhere outside of the U.S. So I need to disclose that. And with that being said, let's go ahead and proceed. And one of the things I just kind of want to add on to what Steve had said about the ISE currency options, what's really neat about them is that you can actually trade these in a brokerage account. And it's one of the things to where you don't have to have a futures account, you don't have to have a spot forex account or anything like that. You can buy a call option on the Aussie dollar in the same way you buy a call option on Google, IBM, or 3M. It's a really neat product in that you can have an opinion on a currency and all the benefits of options such as spread trading, buying a call, doing a condor, doing a butterfly, doing a straddle like what we'll be discussing today. You can do them on the currency, and you can have limited risk, or if you want to go naked, you can have unlimited risk for that matter. So it's really a very innovative product with how they have it set up. Now, in today's presentation, we have several points to ponder, and the time frame for this, I'll be talking for about a half hour, 40 minutes or so, or whatever it is until Steve gives me the hook, so to speak, or however long-winded I get. And at the end, what we'll do is we'll open it up for questions, and if you have a question that really is pertinent to the presentation, feel free to do a chat with Steve or myself, and we'll see if we can answer it during the presentation if you really need to have it answered at the time being. But typically it works better if we wait till the end for questions from what I've found. Points to ponder for today. Which way is the market going? Like Steve and I were kind of talking a little bit before the event. There's a lot going on in the news these days for the currency marketplace. We have the mining tax in Australia, to where that's one of the things with which it hurt the Aussie dollar. Now they're talking about getting rid of it. That helped the Aussie dollar. We have the Gulf spill that's happening right now. Now that's one of the things with which that could possibly benefit the Canadian dollar, depending on how that turns out. With the Canadians raising rates as they did recently, or a few weeks back, that's another thing that's been big news, and that maybe there's countries that are benefiting, so to speak. And like Steve was saying earlier today, you have some countries that are in deflation risk and some countries that are in inflation risk. It's a very unique time frame right now in the currency world. Are you diversified? We're going to talk about that thought. In my opinion, having large cap, small cap, and mid cap is not diversification. It's a portion of diversification, but it's not real diversification. I'll talk about what I believe is real diversification as we go. We're going to be going over the straddle as well as the strangle, their neutral market strategies. The thing that I have that's a pet peeve of mine in the straddle is that oftentimes it's sold as this get-rich, easy money strategy. You can make money if the market goes up or down. Well, that's kind of a half-truth, and I'm going to tell you the full story on straddles and strangles today to the best of my ability. We'll go over why you would consider doing a market-neutral strategy. We'll go over why you would consider trading currencies, and then we'll talk about Vega, Delta, and Theta. What I mean by that is, excuse me, ways with which volatility affects options, ways with which the underlying movement affects options, as well as the way with which time decay affects options. Oftentimes, I hear people say, or I hear the frustration of beginning traders saying, well, I bought a call option and the stock went my way, but I still ended up losing money. And that makes it tough. That makes it very tough when you're just starting out, you think you got it, and then you do what you think is the right thing, and you still end up losing money on it. Well, we're going to talk about other factors in option pricing and the importance of them when doing not only straddles and strangles, but just option trading in general. Now, where's the stock market going? This is one thing that I always find interesting when I ask people is some people are bullish, some people are bearish. Maybe the S&P, it had a real big day, it had a real big run up today, so maybe that's a sign of things to come, or maybe it's just a head fake and that the real bears are coming soon. We're going to have a double dip deflate. We're going to have the double dip recession. Who knows? Are you a long-term bull? And for me answering that question, my answer is yes, I am personally a long-term bull. Whenever anyone asks my long-term sentiment on the market, I always tell people I'm long-term bullish but short-term cautious. I very much believe in options as a hedge for the long-term portfolio. It's something that I've always believed in. It's kind of been how I've built my career for the most part, in that I think that if you hedge the long-term portfolio, there's a lot of merit in doing so, assuming the situation makes sense to the individual trader and or investor. With that being said, are you also a short-term trader? Now, a short-term trader, you have to have a different mentality. If you're always buying stocks and you're always trading the upside of the market, there's going to be times with which you need to say, okay, I don't see anything today. I think that I'm going to just stay in cash for a while. Now, if you're trading both sides of the market as a short-term trader, you can be bullish or bearish. Now, it's this small part of picking which way the market's going to go that we all run into as a problem as traders at one point or another. So as a short-term trader, it's a different mindset than having the long-term investment mentality. Now, with that being said, are you just too uncertain to venture into a marketplace? Let's say that you're looking at all these things that are happening in the currency, such as the euro, the yen, the pound, whatever the case may be. Is it just a little bit too uncertain for you? Or are you of the feeling that, you know what, if I buy a ton of British bonds, or if I buy a bunch of just European stocks or whatever the case may be, I'm just so scared of the overall currency risk that I just want to stay away from it? Well, that's where options can come into play to help you define your risk.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.